Now, the top business story this week, no doubt, is the $36 billion takeover of Santos, which ended abruptly late this week. Just 2 days before it was due to make a binding agreement, the XRG consortium, led by the Dhabi National Oil Co, walked away. And the big question still is why? Well, on Friday this week, I spoke with Santos Chief Executive Kevin Gallagher, who was at the company's operations in Narrabri, New South Wales, and asked him why he thinks the consortium walked away.
I wouldn't say I was surprised. I mean, my approach to these things has always been that it's business as usual until it's not, and very, very focused on running the business in a business as usual way until we know exactly how these things pan out. Look, it's always a risk. You know, there's a lot more to these deals than just simply agreeing on price. And so to go from a non-binding phase to a binding phase and get all the various terms negotiated and agreed is always a tough period with very extensive due diligence during that period as well. And so it's always a possibility, right? And so it's very important that the core business stays focused on delivering on its key projects. And in this case, unfortunately, XRG just couldn't get there, and so we move on. And it's very important now everyone at Santos stays focused on delivering our major projects that we've been promising to bring through now for the last 3 or 4 years. And we're very close to delivering on those. And so our focus is very much on the go forward.
We'll get to some of those in a moment, but I want to go to some of the speculation late this week as to why this deal might have fallen through. Some suggest it's capital gains tax on your PNG assets. There's other things, including the guarantee to supply gas to the east coast of Australia. Some suggesting maybe it was just a realisation that Jim Chalmers and the Foreign Investment Review Board would not approve this deal. And then there's also suggestions that a gas leak at your joint venture with ConocoPhillips in Darwin could also have been a reason. Any of those actually ring or have resonance with you?
Look, I think when it comes down to risk allocation between the two sides, risk is always a major issue in any of these transactions. On the first couple you talk about there, you know, taxation for the buyer is always a challenge, and how you're going to structure the deal and structure the entities that own the various assets after a deal in order to understand what your tax position would be. That would be a position for XRG to review, and that's not really a Santos issue. Those sort of tax issues that you're referring to are not tax issues for Santos as we stand today. They'd only be tax issues for anybody buying Santos and having to pay any capital gains taxes on that. In terms of domestic gas supply, of course, Santos would have an expectation of any buyer that if they come in, they would make commitments to the domestic gas market on a go-forward basis. And so if the other party wasn't able to agree to those, or agree to those at least in the agreement, that would always be a concern from the Santos side. As for the Treasurer and for FIRB approvals, they of course would make their assessments on those risks, and they would have to decide whether they felt good or otherwise about the prospects of getting those approvals. And I'm sure that would play into their decision making. As for the Darwin issue, that's not really an issue. It was an issue known to their side. It's a known fugitive emissions issue. We've had a Darwin for more than 20 years. It's been public for over 20 years. And certainly that information on the asset was always in the data room. That wasn't anything new that came out just because of media speculation or something that some parties raised in the last few weeks. It's a long known factor. And it's important to recognise too that the fugitive emissions in Darwin, even with those fugitive emissions from the tank, are still below what most of industry is setting as 2030 emissions targets for fugitive emissions on plants of this type. So we've got a very low level of fugitive emissions overall, even including the tank.
As you said,
it's less than 1% of our total emissions. Yeah.
As you said there, Kevin, it's now, you've got to get on to business as usual for Santos. But I do note that brokers already are theorising that you may have to split off assets, that there may be a restructure of Santos to try and build some value for the shareholders as well.
Well, look, I think there's two things. There's two people talking about that. That's analysts. I've seen a few analysts talking about that in some of the reports. And there's others with self-interest who would want the media and analysts talking about that, because of course they'd be looking for opportunities to pick up some of our assets, which, you know, a lot of them are good assets. I'm here in Narrabri today. There's a few folks out there talking about wanting to get a bit of Narrabri, and I don't blame them. It's a bloody good asset. We've invested heavily. We've been here for 15 years because we believe it's a good asset, and it's going to be a great project serving the people of Narrabri as well as Santos and the wider East Gas markets for decades to come. We're always open to anybody who wants to buy our assets or to buy into some of our assets, but they're going to have to pay a good price for it because we know the value of those assets. And if you consider why XRG and others have looked at Santos over the years, it's because we've got a good business. You know, they're not buying a broken business. Santos doesn't need anybody to come and buy the business because we're broken and we need a bailout. Santos isn't out there actively trying to sell the business. But people are looking at it because they see we've got a good set of assets. And so it doesn't surprise me that some people are pushing that. But what I would say, Ross, is I've been speaking to most of our major shareholders over the last couple of days, and not one of them has asked me to break up the company or to sell the assets. In fact, what they're all asking me to do is get focused on the plan and deliver the cash flows and the returns that we've been promising now for the last few years as we've invested in this new wave of projects. And that is very much our myopic focus across the organisation now, is bring on Barossa, bring on Pikka Phase 1, let's deliver these returns to our shareholders that we've been promising now for the last 3 or 4 years, whilst we've been investing heavily in this growth programme, and do that and be able to invest in continuing to grow the company for decades to come.
OK, let's go to the east coast of Australia, the gas shortages there. You're in Narrabri right now, which still does not have its final approval to be able to ship gas to the east coast of Australia. There's also Beetaloo, which obviously has to be connected in some ways to the east coast to get the gas from that basin into the east coast of Australia. Explain first off with Narrabri, just where's the hold up right now and how long would you imagine it will take before there is gas coming out of there?
Look, the Narrabri project was approved in 2020, and so the approval for the project itself is robust. But without a pipeline, that's not really very useful. And so today we're working hard on getting our pipeline licence, and we've got more than 30% of landholders along the Hunter Valley pipeline now signed up, and we're working with many other landholders to get those guys signed up as well. And so we're very confident over the course of the next 6 to 12 months we'd be positioned to get that licence. We're working and progressing native title, and we're very well progressed in that. Those discussions are going well. The negotiations are going well. We've been awarded native title twice for the project today, and both times have been appealed, and we're going through that final appeal process now. But we're very confident we'll get there and working with the Gomeroi people to get agreements in place to allow us to push forward on the project. So it's really just native title and pipeline licence. Get those two things in place and this project can go forward. And what's exciting about that is you're only talking really from that point in time about another couple of years to get this gas to market. It's quite a simple project in reality. It's a low impact project in terms of the environment, but very significant in terms of its impact on the East Coast market, providing up to 50% of the East Coast market requirements in the years ahead. So it's a project we've been committed to for a long time. We've spent significant amount of money on this project over the years. We've built a very strong presence here in the local community in Narrabri, and that's why I'm out here this weekend for our annual Festival of Rugby event that we have in Narrabri, and spending some time with the communities. And not only us, but the community itself is now very excited and determined to push forward on this project.
OK, and I understand there's also potentially a supply agreement you might be thinking about with the local community as well?
Yes, this morning we're delighted to have just signed with the council here a supply agreement where we're committing 3 petajoules of gas to the local community to help them support the establishment of their local industrial development zone here in Narrabri to attract local businesses, manufacturers, industrial users who may require gas to come and locate their businesses here in Narrabri and develop industry and jobs in this region. And that's really exploiting the great transport position, the infrastructure they have here in Narrabri. And from our point of view, we're delighted to be able to supply that gas. That'll be, if not the lowest cost of supply gas anywhere in the east coast of Australia. It'll be very close to it. Obviously taking out a lot of the transportation costs, because the gas, or the users of the gas, I should say, are right next to the project itself. So it takes significant costs out. That's very affordable gas for industries and businesses that can locate here in Narrabri. So we're delighted to do that. In addition to that, we've recently signed MOUs with Engie and Orica for gas from the Narrabri project, long-term supply agreements that hopefully we can develop and finalise and make binding on condition of the project going forward. And if we can do that, that would be something like 75% of the gas from Narrabri already being forward sold and contracted to very significant users here on the east coast of Australia.
There's one other project I want to talk to you about while I've got you, and that is the Barossa project. I know that must be very, very close to shipping gas through to Darwin, and then obviously a lot of that will go to the export industry as well.
Yeah, look, I mean, the project is very, very advanced. It's imminent now. We're very excited. We're all waiting to hear when first gas will start to be produced from the Barossa project. I'm sure we'll have something to say on that very, very shortly, but it's not far away. We've drilled all the wells, we've finished the drilling, the plant's waiting for gas. They're ready for startup milestone. They achieved that on the 24th of August. The FPSO facilities now, they're ready to receive the gas. The subsea wells, we've drilled all of the wells, as I said. The subsea infrastructure's all been fully commissioned. And so we're right. You're asking me a question at a point where, you know, in days or hours even, we might be in a position to say that we're taking gas. It's that close. So fingers crossed we'll be there shortly.
Kevin Gallagher, always good to chat to you, and many thanks for your time today.
Thank you, Ross. Pleasure.